All right. Yes, I know what you guys are gonna say. Another DGOC update. Yes, and I thought I'd be ahead of you and I just use it as a title because there's not much else to it. DGOC has sent a lot of new information out this week, and I thought it'd be a good idea to talk about it again because, well, among the other things, they're actually moving to the main market, which is great news. So, we're going to talk about that today. Um, First, I would like to thank you all for the support. Like, I've received an incredible amount of support. I also appreciate the likes that I've seen and the replies that I've been receiving because I think liking a video in general is something that you can easily forget. I know I would, so I just appreciate it that you guys are doing that, so thank you. On to the DGOC update. We're going to talk today about the extra liquidity that they have obtained, and we are going to talk about the move to the main market, which is basically one of the best things that we could have seen in this quarter. So let's start. Extra liquidity. DGOC announced that they have securitized a financing agreement. They have a new securitized financing agreement of $200 million. This is a pretty good deal. This is you can check the deal in the comments below. I haven't shown you all details in this video, but if you want to know the yield on it and stuff like that, you can just check out the report yourself, or the announcement yourself, I should say. I would like to focus on a few things about this new securitized financing, and that is the key benefits, basically. So, what does it do? It strengthens DGOC's commitment to sustain its dividend. Like, I think this is just for people who really want to see dividend, just feels a bit safe. To me, it doesn't really work like that. They have already secured that by all the hedging they've done in 2020, but it could be that they are talking further than 2020 and 2021, as you can see here, because here they mention DGO now has over 40% of its production hedged with long-term 6 to 10-year contracts, providing for high, visible, dependable cash flow to complement its stable, predictable production profile. So the loan is not to pay out dividends, it is to sustain its dividend. It is to make sure that in the future they are able to do so. So what they are saying here in between the lines is, yes, we can use this for either the liquidity if we need it, but we can also use it to acquire new assets. So all in all, it is good news. Second point, approximately 2/3 of DGO's debt now resides in long-term fixed rate amortizing notes underpinned with long-term hedges and no redetermination risk. So what does this mean? If you start a business and you need to take out loans, then in general you are not going to get a loan at a very attractive interest rate because there's more risk to it, so they want a higher interest rate. Doesn't only happen when you just start a business, it could also happen when you are going through a terrible time like Carnival Cruises, and then you also have to take on a loan of 11.5%. But this one is not the case. They had loans that they had to pay the interest on anyway, and that they had to pay off regardless. They changed the type of borrowing, so that is something to keep in mind. Third point, enhances DGO's liquidity. It's currently around 200 million, and basically it's going to get another 200 million. And it also strengthens the balance sheet, further diversifying its debt structure. So it's all good news in that regard. Then I would like to go to the fifth point, which is leverage neutral. And I just received a reply from DGO. Here you can see it sounds a bit like DGOC, but DGO. Maybe I pronounced it wrong, that could very well be the case. And he said, I keep coming back to their debt since it just increased 200 million, their leverage went up a lot. Since it is expected that wind and solar will cause a decline in energy generation of natural gas, these expectations tend to not always come true, but if it does, we see low prices like we currently are. If so, the debt will form a bigger hurdle to the cash flow that can be returned to stakeholders in the future. The company does look undervalued at the moment, missed out on buying, and it rose another 10% today. Obviously, DGO, this is short term, so over the long term, it's still not that badly priced. But let's start with, the increase in debt with 200 million. This, as you see here, here is leverage neutral, and we'll come to that in a bit. But I would also like to take this point with you, since it is expected that wind and solar will cause a decline in energy generation of natural gas. Yes, that will happen over time. I'm not going to say it's not, but that is global usage that will reduce. Who knows where it's going to reduce? And let's think about how much the production of DGOC is compared to the world usage of natural gas. I calculated that like a week ago or something, and it was 0.1%. So it is not that relevant for DGOC. The important thing is that they stick to what they know and they hedge, and they are able to sell whatever they produce at a certain price. That's what they want. That's all there is to it. So just wanted to get that out of the way. But let's look at the debt for now. Leverage neutral with proceeds of the notes, so that's what they got, the 200 million, to reduce the balance on the company's existing revolving credit facility. So what does this mean? They will use this leverage, which is just basically a better deal, to reduce the debt on this one. I'm not saying that they're going to pay it off completely, but it does balance it out a bit. And in my opinion, and I know you guys, or some of you guys, are worried about the debt, I'm not worried about the debt because they have hedged whatever they need to pay off, and they use it to get growth. Like you can just see at the numbers, yeah, they grow with like 20-30% per year. So yeah, when you use debt and you have to pay a 5 to 6% interest rate, then you're using it pretty decently. So I'm not that worried about it. So I hope they don't pay off everything with it. I hope it's just like a backup while this revolving credit facility slowly comes to end. That's what I'm hoping. And the final point, also important, amortizing structure demonstrates commitment to continuous debt reduction and eliminates future bullet payments along with the associated refinancing risk. So just want to emphasize continuous debt reduction. They're always working on reducing debt, and based on what we saw last year, we can expect at least 100 million paid off in debt in 2020. So that's just going to keep happening. So I wouldn't worry too much about the debt. If you want to avoid debt, obviously you should avoid DGOC, but I am not one of those guys who believe that debt is bad per se. Like, debt can be very good. You have just good debt and you have bad debt. If you use debt to survive, it's bad debt. If you use debt to grow, it's good debt. Simply put it. Obviously there's more to it, but I don't want to talk about that right now because otherwise I make a long video again. So let's get to the second point, which is the best point. Move to the main market. Introduction to the premium listing segment of the official list and admission to trading on the main market of the London Stock Exchange, and with that the cancellation of admission of ordinary shares to trading on AIM. So this is the big part, all the big announcement, but let's take what matters from it. They will publish a prospectus in connection with admission on or around 11th May 2020. A week later, 18th of May at 8 AM, they will no longer be trading on AIM, but they will be trading on the main market, also known as LSE. So that's great news. And yeah, let's see why they did that, because that's also good to know, right? The board believes blah 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 will benefit shareholders in many ways. So let's get to the points. It will improve the trading liquidity and valuation in its ordinary shares due to potential inclusion in the FTSE. and other indices. A greater number of institutional investors who regularly trade in the shares of companies listed on the main market. So what this basically means, there's two catalysts that could happen. Either either index fund managers are gonna buy it, or just fund managers in general are gonna buy it. They are gonna be more likely to buy it because now they are on a more, how do you say that? Like respected market. Like AIM does not have the same rules as the London Stock Exchange, like the main market. So getting to that main market will not only just make you more well known, it will also show that you do things in a way that is respectable. Let me just put it like that. I don't want to get too deep into that part. So, second point, increasing the company's profile within the UK and internationally, thereby helping it to attract new investors, including within the United States, where DGO operates, and throughout Europe. Well, all you guys who are following me are probably from Europe, if not most of you, so it has done exactly that. They have attracted some new investors. And yeah, final part, providing a better suited and enlarged funding platform to support the company's long-term growth strategy through accretive acquisition of long life, low decline cash producing assets. This is basically always the same story, right? It's like just the repetitive part, but they just want to increase their funding platform. So what does that mean? They want to grow. They want to grow even harder and faster. So yeah, all in all, very good news, and it's actually happening pretty quickly. So within a month, approximately a month, we will be on the main market. One thing I would like to note, I'm not entirely sure about this, maybe somebody in the comments will know that. I believe that you will have to pay transaction taxes on the London Stock Exchange, the main one, because I have two other companies and I have been paying taxes for that one. Could be because of my account, different account, but I don't know, something to keep in mind at least. So, what did the DGO CEO said about this? I think this is just nice to read. You will see that he is confident. You will see that he knows what he's talking about, and in general, he comes across as honest, which I think is very important. One thing I highlighted is progressive growth. He's always focusing on progressive growth, and here in the bottom, unwavering commitment to shareholder returns. So just read this. I think it's always nice to read whatever the CEO has to say. It's good stuff. I just want to do this part. In the current challenging times, which we all know about with the low gas prices, our cash flow centric message and disciplined investment thesis stands out as unique in the sector. Unique, what does that mean? It means the company has a moat. So always want to have a moat as a company that we invest in. We believe our focus on low risk cash flow and unwavering commitment to shareholders in the form of reliable dividends sets us apart from our peers and will resonate with a broader investor audience as we continue to prudently grow the business and expand our track record of value creation on the main market. So nothing is going to change business wise. All that they want is they want to go to the main market, have the stock price grow. Doesn't mean that the underlying parts will grow with it, obviously, but they have already announced that acquisition that is maybe happening within 3 months, I reckon, based on previous acquisitions. So all in all, very good news for us shareholders. The catalysts that I've been naming, the main ones were either the gas price is going to increase by the end of this year with the winter, or the move to the main market. So I'm happy that it's happening. I'm happy that we are already this close. And I just one more thing that I want to say. It does not mean that I am expecting the stock price to instantly go up when they hit the main market. And yes, everybody wants DGOC, because who wouldn't want DGOC? Like, I know you guys know that. I know that. But people will not know that in general before they will be bought by index funds, they will need to, the index itself will need to have a new calculation. They will need to see, okay, which new, let's say 350 companies will be included in this index. This depends on the index calculation, like some do it every quarter, some do it half a year, and it also depends on their calculation itself, because it could be that they are going to take an average of the past 6 months as a market cap, for example. So it does not mean that instantly we're going to see more people buying this stock. However, moving to the main market is interesting, and in my opinion, I think it will be less likely for people to sell it right now. So yes, if a company has decided to sell it this week, they will continue selling it. It won't change that much. But if you are unsure about holding this company, I think this is a great sign, and I don't think you're gonna want to sell it right now. You're gonna wait to the main market and see what happens. So in the short term, I do not expect to see us go that much lower, but that's obviously speculation, so don't take my word for it, and don't base any decisions off of this information, please. It's just my thoughts. So that's it for today. Hope you guys enjoyed it. Feel free to let me know what you think about this in the comments below. If you like this update or you like DGOC in general, just leave a like. I appreciate it. And I'll be working on the new videos that I mentioned yesterday this weekend, so hopefully I can pump those out for you in the near future. Take care and have a great weekend this time.